Hey everybody, I'm Jono and welcome to Trading with Master Jack. In this video we're going to be dealing with the currency strength meter, part 1 of 2. What is a currency strength meter? A currency strength meter gives a trader an indication of what currencies are weak or strong against a common base currency within a determined time period. There are many currency pairs that one can trade, but which one is best to trade? A currency strength meter is a great tool to guide you on getting a great trade setup. Increases your probability of a winning trade setup. There are many different types of currency strength meters that are out there, and if you are using one, it must be used within its intended parameters. So therefore, you must understand how your particular currency strength meter works. Otherwise, it will not work for you, because at the end of the day, it is designed in a specific way. So basically what we're going to be dealing with is a simple currency strength meter, a simple design that you can use as a tool. So here is our simple steps. Firstly, you got to create a list of major currency pairs and any other exotic pairs that you favor with a common currency base. In this case, we're using the US dollar as our base currency. You convert the currency pairs to the common currency base, so it'll be the currency paired with the US dollar. And then you calculate the rate of change for each pair over the last 15 weeks. Now, research suggests that 3 months is a good indication of a consistent trend. So that's why we basically use 15 weeks is mostly equivalent to 3 months. And we do this when markets are closed, so weekends work well to plan for the week ahead. And then you got to rank the results from strongest to weakest. And then you have your rankings table, and from that you can decide on pairs to analyze using your trading plan then. And here is our table. You create a list of major currency pairs and of course any other exotic pairs that you have that you favor with a common base. In this case you see we've got all the major pairs here: Australian dollar, euro, pound, New Zealand dollar, the Canadian dollar, the Swiss franc, and the Japanese yen. Then you got to calculate the rate of change for each pair over the last 15 weeks. Now, first off, the US dollar will be at 0 because the US dollar to the US dollar has no rate of change, so it would be 0. For our first pair, the Australian dollar to the USD, we basically use TradingView. TradingView is a great platform that I use to analyze my charts. I do have it there, the link in my description. So let's kick it off then. You see we put in the Australian dollar and USD pair over here. You just type it in there and you call it up and you select it there, and then it'll come up. And then basically you need to go to indicators, and then you'll search for the rate of change, ROC, select it there, and then you go over there to change it to a weekly view. And then it's important to change this to 15 because we're using 15 weeks, 15 periods. So it's 15 weeks, 15 periods. And there you see it's the latest, the value shows over there, which currently that is 2.82. We then put that value into our table, 2.82. Now onto another example of the Euro USD. We then go to the top left there and we insert Euro USD, just clear that, you select it, and there you go, we already got our weekly value and 15 period, and there we go, it's just minus 0.99. Then we take that value and we insert into our table, minus 0.99. And we do then the same process for the pound and US dollar, and that value was minus 5.39. The New Zealand to the US dollar was 0.79. Okay, now you would have noticed that the USD and Canadian pair, the base is not USD for these three pairs over here. Now it's very simple. We have to convert the currency pairs to the currency base so that it matches up currency the USD. So all we're going to do then is swap them around. Now I know we don't get a Canadian USD pair, but for the sake of the calculation of this currency strength meter, we swap them around. But now how do we calculate their rate of change? Very simple. We go back to trading view, and there you will see we can actually call up a chart like that. And here we go. At trading view, we just simply type in that pair, Canadian dollar and USD, and there it comes up. And there it gives all the information we need. And as you can see, we're weekly, we've got 15 period, and it's 1.44. And then we simply just put that value in there, 1.44. Let's look at one more example. Same goes here. We put in the Swiss franc and USD pair, we selected, and it gives our value once again. And in this case, it is minus 0.09. And then we put the value in, minus 0.09. And you just simply do the same for the Japanese yen and USD on TradingView, and then we get the value of 1.43. And then we have to rank the results from the strongest to the weakest. Naturally, if you're using a spreadsheet, you can just automatically let it rank it for you, and that's what I did. And then basically we get it like this, where the Australian dollar is the strongest pair with 2.82, and the weakest pair being the pound to US dollar of minus 5.39. And then we have to basically decide on pairs to analyze using our trading plan, and we make a number of possibilities here. We'll start off with the Australian dollar and the pound. When you take the currency pairs that are furthest away from each other, like the Australian dollar and the pound, they should be in a trend. Currency pairs that are right next to each other, that are similar in value, very close enough to value, like the Swiss franc and the euro even, or the Swiss franc and the USD, those would then be considered to be in a range. So trending currencies are further apart, and closer similar values they would be considered to be in a range. So we're just going to have a look at that. And then our second possibility that I'm going to pick is the Canadian dollar and the euro, and then we've got the Australian dollar and Canadian dollar, the euro and the pound, the Swiss franc and euro, and then actually I would like to throw just some more possibilities here. We'll do the Canadian dollar and the pound, and the last one over here, the Japanese yen and the New Zealand dollar. So those are the charts that we're going to be analyzing. Our first possibility that we're going to look at is the Australian dollar and the pound. So let's go over to that chart. Now, if you remember, the Australian dollar is the stronger one, so therefore it is in a downtrend. And as you can see, it has been in a downtrend for some time. It already had the intersection here early April on the MACD line intersecting the signal line, indicating the downtrend. And you can see it's been for quite a number of weeks. So it could be coming towards the end of its downtrend and can start changing direction. But I think at the moment, as you can see at the 200 moving average, it had just found a lot of resistance as it broke through there. So I will definitely be holding a short bias, looking for selling opportunities. So now basically what we need to do is go to a lower time frame, and in terms of the factor that we use, we're going to the daily, so it's a factor of 5. If you can recall from the video multiple time frame analysis, a very good one to watch as well if you have not watched it. And over here we can see on the daily the trend obviously going downward, and it's below the 200 moving average, has cleared it quite well. And we're going to be holding a short bias on this one. That's where the intersection happened on the weekly chart. We're just going to go on to the making a trend line over here. You can see the trend lines, different traders plot their trend lines in different ways. They would plot it from here going downward like this. But in my case, I like to plot my trend lines where it touches as many points as possible along its trend. So in this case, you can see it's touching at several points along the price going downward. And now we're over here. Going on to the 4-hour chart, there's that trend line again. What we're basically going to be looking at, because we're going to hold a short bias, we're looking for opportunities to sell. So we've got our resistance line there. That was previous support that had broken through and become resistance. It would have been a great entry opportunity over here with this bearish engulfing candlestick. and even over there we had a shooting star, so that would have also been a great entry opportunity in the previous week. But now we are here, so let's look at where our next possible entry position would be. Next resistance line I would plot over there. We've got a immediate resistance line there, as you can see. I believe though that it's not necessarily going to be a strong resistance, but the price should be going back upward. It could even go further down and then back up, but I will only be looking to entering when it's alongside this trend line, because that would be my greater area of value to enter from. And there is the indication, so I'll be looking for the price to get alongside here, and that's where I would be looking at entering. Now to our second possibility, that would be the Canadian dollar and the euro, the Canadian dollar being the stronger one. And there we go. As you can see, the Canadian dollar is the stronger one, so therefore it should be in a downtrend. Now as you can see, it's not a very strong downtrend. It is a little bit of a weak downtrend. Almost looks like it's gone into a bit of a range. But the MACD line had made its intersection on the signal line going downward, and as you can see, momentum is also reversing at that point. So it comes coming from a place of strong momentum where there was low momentum and picking up here. So there's the possibility that it could be entering into a strong downtrend. So therefore I would definitely be considering to hold a short bias, and then we can see how that works out for us. Going to the daily time frame, we'll plot our trend line over there. As usual, touch as many points as possible going down. See a possible false breakout upward there. And there we got our support line. You actually start noticing that there's a bit of a descending triangle formation happening here. And we've got our resistance line there. You'll see that we've got lower highs being formed over there. A third one over there. So this could be signs of descending triangle. Price consolidation into support as well. And there's a low momentum here showing the potential for a breakout that would possibly be in the downward direction. This might not happen in the week to come. It could just go further down, a little bit up into that resistance before it would have its breakout. It can even go out of this triangle line over here at this point, just go a little bit higher even. That possibility cannot be ruled out, as you do have a possible resistance line just over there. Going to the 4-hour time frame, there's the resistance line, the support, and our trend line. And we're now looking at our immediate area over here. I do believe the price looks like it would continue going downward before it goes upward. And then I would look at entering my position at an area of value before it goes down, and that would be just over there, which is also below this immediate resistance that is found over here. There's also a bit of a entry trigger over there with a shooting star. And you'll notice though as well that we've got this momentum sitting right over there, and it's just showing that it's pointing downward as well. So there's the possibility that it would move a bit down before it goes back up into our area of value, and this would be our best place to enter into this position. Now looking at our third possibility, the Australian and Canadian dollar, you can see that the ROC is quite close to each other, so therefore this could be possibly in a range. If we look at our weekly time frame for this currency pair, you'll see the price has been trading relatively sideways, and but it's more on the downside, so it's a very light downward trend over there. We just plot a resistance line here, which was previous support that had turned resistance quite strongly at that point, and there we've got our support, but this will not really be in view of our lower time frames when we're looking at the lower time frames. It's below the 200 moving average, going downwards slightly, so I would consider holding a short bias. At that point you can even see that there was strong rejection of the price at the 200 moving average, and so it would be good to hold a short bias there. You'll see the momentum on the MACD also was quite strong in the upward direction there, so there's a possibility for momentum reversal, and even on the stochastic showing an overbought situation over there pointing downwards. And now looking at the daily time frame, there's that resistance line. We put an immediate support line over there, and you can see the price has been going sideways. They're quite tight in a consolidation over there. On the MACD, it is showing overbought, showing downward at the moment in terms of the momentum. So there's a possibility that it would be going more on the downside for the next couple of days. You can even see on the stochastic that it has gone from overbought already going downward. Looking at the 4-hour chart, is at resistance and support lines. What do we have over there? We've got low momentum on the 4-hour chart, and our stochastic is already showing that it's been in this zone of our 50 to 0 zone, showing that it's already possibly entered into its downtrend, and it's already showing downward there. So there's a possibility that the price would be coming down there slightly before it goes up, and that it would be rejected in the upper side, and then you actually have two opportunities in this particular situation. You could even buy when the price has a clear signal entry trigger going for this upward direction in the price action, and then when it is rejected at the resistance, then that would also be a value to enter into going short to gain, and hopefully there can be a breakout downward to the downside that you can benefit greatly from. But there's also the possibility that it can already break down from here, which if that would happen, you will see that the support would be broken, and then it would most likely come back, and hopefully it would come back, and then you can enter into your position. But then obviously that changes the scenario, and you would have to reanalyze it at that point. Now looking at our fourth possibility, which is the euro and the pound, you can see in terms of the ROC value, there is a bit of space between them, but they are the last two weakest ones in this table, so we'll possibly consider it to be in a range. And if you look at the weekly time frame, there you can see it is trading sideways, quite in a range, and we've got our resistance line just on top here and our support down there. On the weekly time frame, it is above the 200 moving average, so I'll be looking to hold a long bias. Let's go down to the daily time frame. There's that resistance and support lines. You can see the MACD going a bit unclear at the moment over there. We've got our immediate resistance over there, which was previous resistance over there as well, so it would be a good one to plot here, that there could be possible price rejection happening here, as we can see at the moment. So I do believe that the price could possibly go further down. We just plot a trend line over here, going upward. You can see it touching from there, touching there, and going along there. So we can see there's a possibility of the price coming down into this dynamic trend line, and that can be our entry position for going long in this position. So we'll buy into our long position over there. And later on, if the price does happen to move quite strongly upward, like it did over here, there's potential for rejection there, then we can even consider going short, but that would be trading against the trend, so I would definitely not advise that. They do say trend is your friend, so rather trade with the trend. Going on to the 4-hour, you can see quite clearly over there the rejection at that resistance line. So there's a possibility of the price coming down into this area of support, which has been taking off from the 200 moving average. So there's a possibility that it might pull alongside the 50 moving average, and that can even be your entry position, because at the start of this trend line going upward, it could be moving into a stronger trend. Now looking at our fifth possibility, that is the US dollar and Swiss franc, both next to each other with the ROC values being quite close to each other. So this should be in a possible range, and as you can see on our weekly time frame, the US dollar and Swiss franc is in a range. We've got an immediate clear resistance line up there, but it's not really relevant to us in our lower time frames. So we've got our resistance line here that was a support previously and had turned resistance at that point, and we've got our support line over there. This is below the 200 moving average, so we will be holding a short bias. Looking at the daily time frame, there is our resistance line and our support, and you can see over there was actually a previous symmetrical wedge that had formed over here, with the price going into a tighter consolidation towards the tip, with a breakout. There was a gravestone doji over there, or even this tweezer top showing a bearish candlestick pattern going in the downward direction. So there was a bit of a breakout there. That would have been a great entry as well. But now we're looking at the present, and we're going to be holding a short bias nonetheless here. Let's look at the 4-hour time frame. There's our trend line. As you can see, each point touching along this way, and our entry position should be right there. So we actually have an immediate position to enter going short over there. There's that resistance line immediately over there. So the price action would not necessarily go up in that direction. I'm banking on the fact that it will go against this dynamic resistance going to the downside. So I think this is a more straightforward chart, and I feel more confident on this one. Now to possibility number 6, which is the pound and Canadian dollar, the Canadian dollar being the stronger one. So therefore it should be in a downtrend, and as you can see, it is in a downtrend. It looks more in the bigger picture as if it is in a type of a longer term range, but we will nonetheless have a short bias because it is below the 200 moving average. So let's look at the daily time frame, and there we can see that the MACD is started pointing downward. So there's a possibility it could bounce off before it goes down, or it can just continue down. So then we've got our resistance on the top, that is the stronger resistance, and the support. And we plot a trend line going down here. You can see rejection of price along this way. That would have been also a great entry point there for a shooting star that had formed over there, and even over here with a bearish engulfing candlestick pattern there. But now we'll be looking at the price possibly going further down, getting support here, and going back into the resistance over there, looking to making an entry going short because we're holding a short bias. So I'll be looking for a real good price rejection along this way, ideally further down there, but if the price goes back there and there's an entry trigger, then I will definitely take it short. Let's just look at the chart a little bit closer on the 4-hour time frame. There's our trend line going down, there's that lower support, and there's the immediate resistance to the price where we're looking to enter into an area of value. So price will be going down, possibly, and up. It could even go straight up from here into this resistance. Then I would look at entering. But there is also the possibility, as you can see, the trend having gone down, it had pulled back into the 200 moving average quite strongly. So there is a possibility that it could even pull further back along and get rejection of price here on this dynamic resistance. So that is also a possibility, but I will look at entering into this position if I get a clear entry trigger. Now on to possibility number 7, which is the Japanese yen and New Zealand dollar, which should technically be in a range. Onto the weekly time frame, we see that it is somewhat in a range, but towards the downside. So it's a very slow weak downtrend, but because it is below the 200 moving average, I would consider a short bias. We plot a trend line there overall, and you can see it is a relatively weak downtrend, but going down nonetheless. So on the daily time frame, you see the picture again there. There's the trend line going down. Nothing particularly that I would consider entering here, except for the fact that it had some consolidation here and a breakout towards the top, where it was rejected and went downward. So we'll definitely be looking at an entry position here going short. Let's look at the 4-hour time frame. There's that trend line. If we zoom in a bit more, we plot a resistance and support, as you can see there. So we'll be looking at the price possibly getting some support here going up. So we'll be looking at rejection of price along this resistance line, which is a little bit closer towards the overall dynamic resistance, but I do believe that it would only go about there, and then we'll look at an entry trigger on the downside. I'm sure you would notice that there's a number of possibilities one can generate from the table as a guideline. I'd just like to do one more, the 8th possibility, which is the Australian dollar and the euro. We're going straight to the daily time frame, and you can see it is below the 200 moving average. Therefore I will be holding a short bias, as it's also in a downtrend, and we can plot our resistance there overall and a strong support that is down there. So if the price had to move downward, it would most likely get some strong support going towards the upside. And there's our trend line at the moment, and you can see we are quite close to the dynamic resistance line of this trend line. So we could look at entering a possible position short very soon. Looking onto the 4-hour chart, there's our trend line and resistance. So once we have the price action moving into this area, this is where I will be looking to entering into a short position from this area value, with my stop loss just being above the 200 moving average at that point. And you can even see that the momentum has gone down quite a bit here, so there's a possibility for a breakout, and hopefully the breakout would be towards the downside. And there we are, 8 possibilities from our currency strength meter that we have analyzed. I will be entering into these positions in the coming week, whether I buy or sell based off our analysis, and then we will see what the results will be of that in part 2 of the currency strength meter. So it is a definite must watch, so stay tuned for that one. And remember, always use price alerts close to your area value so that you can have some time to review your possible entry. Especially if you're a part-time trader, you won't be able to just get to your device immediately if you have your price alerts right at your entry points. And of course you can use orders, but do be careful for those, as you can get caught up on slippage, and that can cause significant losses. If you enjoyed this video, hit that like and subscribe button so that you don't miss out. Happy trading, and may the trend be with you.